Morning, everybody. Thanks for being here.
To profit from iron condors for income. And even if you have a small trading account, it's a very appropriate strategy. We are excited. We have not been back to the RTW community on a solo event for over a year. So hopefully we are going to have a lot of fun this morning, and you guys are going to learn a lot of stuff. Thinkorswim feel and look this morning, so that we are going to discover together. This is the P&L that I finished with yesterday, which is about $2,100 on an up-down day. Actually, I was not really around, but the power of some of the stuff here that we will show you is the power of having time decay on your side and doing credit spread, iron condors. I think most importantly also is to know how to defend them. So we'll show you some examples, like here on Amazon. And again, this is new for me. This is their new platform. But see, on Amazon, I had a put credit spread, which was a 530, 527, 5. And what I did is back ratio, meaning that they reached, so I had a 530 short. Okay, so no, sorry, I had a 527. So I had a 530 short. Yeah, that's right, 530 short, and a 527.5 long, right? And I was one contract short here and long one contract here. The market reached resistance, so I take my profit on the short put, right? Because that made money, and then I let the long put roll back, and look, this created a nice little profit on the way back down as the market sold out. This is a perfect iron condor here, 550, 555, 485, 480. So what we want to do with Kevin today, Kevin and I, for the people who don't know us, the DayTradingZones is a research and analysis firm for hedge funds, institutions, and the retail side. Kevin and I both have hedge fund backgrounds and also trading our own real money every day. We trade real money, real accounts. Like I said this morning, this is the new feel and look of your Thinkorswim account. For all disclosure purposes, I have 6 accounts. So we'll go through some of those trades here. This is a real account. For the Thinkorswim users, you know, this is the real account, and if it was a paper account, it's red and it says paper account. So we'll go over those and try to do a very informal presentation for everybody today as far as the processes that we do. Most importantly, I want to show you the results of one of our best students in the Trading Zone community. Her name is Penny Creel. She's a real person. I'll show you on our Facebook mastermind group later on. And this is a lady that have never done credit spread and iron condors before and joined our mastery in January. And you see that from January to about mid-April, April 24, so she gave herself a full 4 months where she learned the platforms, the processes, the DayTradingZones processes. She tested them with one contract and the sim. She also really went on a journey to master our trading platform, our charts. And then she entered the business of doing out of 6 strategies that we feel are the highest probability strategies to make money. You know, it's not about being the jack of all trade, but learning few strategies in this business that will help you make consistent money with income trades like credit spreads, iron condor, iron butterflies, and also growth trades to grow your account from a small account to a bigger account. And Penny deposited about $32,000, and in less than 6 months, guys, she's brought her account to $100,000, which is 231%. This is very, very unique. Very few people in the trading industry can achieve those type of results. And so this is to let you know that the stuff we are going to share with you today, if you don't know who we are, this is the first time that you listen to me and Kevin, that we do those with real money, whether it's me, whether it's our traders, they trade real money, right? This is an interactive broker account for the entire year so far, see, till the end of August. And those are incredible results. This lady crushes 99.8% of all the hedge funds out there with that type of return on investment, right? So by keeping it simple, right, Penny does credit spreads, and then she is into iron condors. And this is what we are going to teach you today, you know, that if the market goes up, goes up, goes up, goes up, and your call premiums are inflated at resistance of your resistance and support, you start opening your call side, right? And then the market tanks, that inflates the put premium. This is the moment to sell your put credit spread. And you ease into an iron condor where you make assumptions that between a support of importance, so this is your support, and this is your resistance, you make an assumption that so long we are going to be between this level and between this level, what's going to happen is something magic, which is the magic of making money three ways in this business. You will make money if the market goes up below that level, if the market will stay sideways, and you'll make money if the market goes down. And there's very, very, very few strategies in the trading world that allows you to make an assumption just based on support and resistance, right? And ranges, instead of trading the current price, at all cost, and making only 50% trade where you have only 50% probability of success. And this is super key, right, Kevin? I mean, this is really a core concept that you guys have to really, really get on the professional side of trading.
And increasingly, thank you, Mark. Increasingly, we're legging into and legging out of iron condors all the time. So why not put this structure, this strategy in our minds as an appropriate strategy and a way to see the market? Look and see, you know, when we started off at the middle of that range and we drove up into resistance, well, most retail traders are just buying at that resistance. And what happens is that if you're in the habit of selling call credit premium into that resistance, then you can really be collecting on everybody is running in the door right at the last minute to get on this position and say, oh, okay, we're going higher. Well, prices mean reverting. And so, we're anticipating that up at that resistance, price is going to pull back. As well, on the way down, look there at the middle of that distribution from the resistance down to support. That mid-level there, right? That's an appropriate time to be taking some profits there at that mid-level, right? So that we can manage our profits, we can manage our trade, and so we really look at exactly. You get 50%. Of a credit on something. Let's say I got 40 cents credit up at the highs there at resistance. Well, hey, when it comes down to 20 cents, and a lot of times it'll happen in a day, but a day or two, right? These could be swing trades as well, for sure. Let's get our profits off and let's think about, what's the strategy now going down into support, right? What are we going to sell down into support, right? Put credit spreads down at the low.
So what we are telling you is when you are opening, like look at the left side of the screen. Can everybody see the pen moving so that I'm sure that the screen is not frozen? So when you guys look at your resistance, okay, thanks, Alan, Fred, Robert, awesome. So when you look at your screen and you look at your resistance and you look at your screen and your support here, what we are telling you is when you look at your support and resistance and you bump into the resistance, what will happen is your call premium are inflated and they are going to reverse anyway, and you know that anyway time decay is playing on in your side when you sell premium. So what will happen is at resistance you start selling the call credit spread. Then it starts reverting What we are telling you is there's a sweet spot of taking profit between 50 to 75% of the profit. So if you sell a call credit spread for $1, it's good that you take your profit and you start closing at least the half of your position at 50 cents to 75 cents. And then let that thing come to the other side and open the put side, right? Now, another way you can do on the iron condor, and that's the idea of the iron condor, of easing into an iron condor, is you have such a good resistance here and you have such a good support here. And this is where you have to really look at your monthlies and your weeklies and the higher time frame instead of doing your credit spread on little time frames like 5 minutes, 60-minute charts, because you will get clobbered by high frequency trading system or dark pools that you don't even know about, that there's manipulation of pricing. That if you have such a good way of easing into them, and it's always about reference point, knowing your zones, that you will be into a point where you make money here, right? And you'll make money here. So you make money on both sides of your credit spread so long that by the time there's the expiration, that you end up being somewhere in between those strikes, because then you make money whether it goes up, like I said, sideways or down. Okay, so let's move on. This is kind of the premise. Another thing that I want to show everybody, if you don't know who we are, this is the August 24 low of the market. And to show you that we were well positioned that day, we made $24,000, $23,000. What we do is a lot of the stuff that we do that you are going to discover is also we are very well known in the industry to not only trade real money, but we are very well known for defense and adjusting, balancing our legs for credit spread and iron condor. That this is something that we do all the time. See, this is a non-balanced debit spread. So what we do is we use our strategy called the back ratio. And back ratio essentially is when you have perfectly balanced trades, like you have a 10 short on the call credit spread and 10 long. Essentially what it is unbalancing that. So you could be short 8 contract and long 10 contract, and then essentially you are net long 2 calls, and now you're becoming a directional person. But if you know very well your support and resistance, and this is really the next stage, that's probably for another invitation to the RTW Real Traders community, you will have to learn to defend and tweak for maximum profit. So the reason you will tweak your legs on an iron condor on a credit spread is, one, to achieve defense, because your assumptions of a support or resistance is not happening, so you have to tweak your legs, or 2, for max profit. And what I mean by that is that, let's say you were short 10, long 10 on a call credit spread, and your assumption was we were going to go down, 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 but look what happened. Suddenly the market reversed, pierced through your resistance, retest your resistance become what? The resistance really becomes support and is about to go and make a new high. So if you untwig those legs, you are short 8, long 10. Now your overall positions are net long 2 calls and your deltas are long. So if this market starts exploding, you're on the right side to not only defend a losing credit spread, but turning a losing credit spread into a winning credit spread. And that's really the second layer, going deeper into iron condors and credit spread as well. So we use this technique to defend, but we use also those techniques to max our profit. Okay, so we cut the lows here in August. This is the absolute low. A week later, in October 2014, those are the 2 biggest inflection points in the market. And see those 184 call, we bought them for $3, they were $10. So they made 3 times the money in a week. But we also achieved that also by cost reducing. See, -1, -1, -1, -1. So we cost reduce our trades all the time on what we do. Okay, so what we do is 2 things. We do income trades, and income trades really for the retail public, right? Income trades for the retail publics are mainly credit spreads and iron condors. This is going to be your bread and butter for income trades, guys. And then we have growth trades where we do put calls a certain way, but we really like the two-legged trade for defending ourselves and having our portfolio balanced in terms of deltas and theta, the debit spread. What we want to do today is focus on the credit spread and the iron condor more and show you more how it works and the growth trade as you get to be more engaged into our community, right? This is very, very important for you guys to learn. Most importantly, you've seen that not only we trade them with real money, this is again my account live with my ongoing P&L from yesterday to 2,137. If you are a Thinkorswim users, you're waking up like me this morning and discovering that they have a new interface. So welcome to the new world of Thinkorswim this morning. So even our charts have a new feel and look into our buy zone, sell zone, and caution zone that I think is very, very interesting here this morning, right? So this is going to be cool for us to discover that with Kevin as we go. See, like here, I'm trying to even look like where are my stuff? See, like where's my power line there? If I want an example with the power line, and I'm looking at that. Oh, here's my power line. And look, Kevin, the power line now is green. So
yeah, we can pull that later, but yeah, we love blue. That's why. We always
so
like to
our blue on the power line is gone. See, I'm trying to see because they've changed their interface, which is crazy. I mean,
yeah.
like
there we go. There's our blue.
I'm sure it'll be a good interface. I think I talked to one of the architects at Thinkorswim 2 weeks ago, and they said that supposedly the new user interface will speed up your computer, will not take and clutter as much resources on your computer. But in the meanwhile, it's interesting to see the new thing. So now what we want to show...
It's supposed to be less code intensive. So it's supposed to be much faster and not have these data glitches that it had before there. So awesome.
Exactly. So here's what happened is that if you are pretty much a beginner or even an intermediate trader, you got to understand how options works in order to understand the power of selling options. If you look at a dollar option, so you look at any options and it's priced, let's say at $1 an option, okay? You're about to buy or sell an option, it's $1. You got to understand that options have 3 components. The first one would be time value. The second one is the implied volatility, and the third one is the real value into the option that is above and beyond the strike price. What you have to understand is to become a better trader at options, you really need to understand how to play those 3 components. So let's say in this example, you break the dollar option into a time value of 20 cents, an implied volatility of 30 cents, and a real value of 50 cents. So let's be engaged here. If the implied volatility stays the same and the real value stays the same, what happened? And let's say this is a weekly options that I buy on Monday. What happened by Friday to that 20 cents? I want everybody to tell us. Okay? What is it? Okay? What is it? Okay? What will happen to that time value by Friday? I buy this option at $1, Monday, Friday, what happened to that 20 cents? 20 cents will be 0 by expiration. The entire time value or time decay of the options will be completely worthless. So what happened is essentially now you start understanding that you are essentially the sucker if you buy that option at $1 on Monday. That is a true value, assuming even the implied volatility and the real value stay consistent. It is an asset that will be worth 80 cents by Friday. So question to everybody, is that a good deal to buy an asset at $1 and knowing by the force of the time decay, Monday, Tuesday, Wednesday, Thursday, Friday, that your asset is worth 80 cents by the time we arrive at Friday? Is that a good deal to be the buyer of that option? No. This is why most of the institutions right? The hedge funds and the good traders sell premium. They know that that asset is going to be at the very least worth 80 cents by Friday, assuming implied volatility same or real value. But now imagine even that now. Imagine you bought high implied volatility and now the volatility drops against you. Now you have a second force going against you where that 30 cents might be 15 cents by Friday. Now imagine another thing, that this real value, your direction, you bought a call and imagine the market tank. What will happen to the real value of that 50 cents in the option? It might go to 25 cents. So do you see what happened as a buyer of an option? You fight against three forces. You fight against the time decay of that options every day. You fight against a possible higher or lower implied volatility, and you fight against a real value going up and down. Is that easy to be a buyer of options? You need to be right in terms of implied volatility. You need to be right in terms of direction and velocity, but regardless, that time value always go against you. Is that easy to be a buyer of options, guys? Is that easy? This is why 90% of the options expire worthless. Because being a buyer of options is not easy. You need to do it. There's a right way and a wrong way to be a buyer of options. And the right way to buy options is the way I showed you right there. Right here. It's by buying and cost reducing at the same time. You buy a 309 options that go to $10 because I have the direction right with the right support and resistance, right? I have the implied volatility right? But regardless, the time value will go against me. So what do I do to mitigate that time value going against me? I'm selling premium on the resistance of day trading zones because it cost reduce and helps me. So there's a right way and a wrong way to buy options, but most of the time, that tells you that the winner is going to be who? Who is going to be the winner in every case scenario? You know, this is going, if you are a seller of option, that goes my way all the time because time value goes to zero. Implied volatility, if you sell high implied volatility, goes your way all the time. And real value, it depends on support and resistance, plus you make an assumption of a short strike. So long it stays below your support or it stays below your resistance, you make money three ways: up, sideways, and down. Do you know any strategies in the trading world that also allows you to make bet within a range three different ways? This is why credit spreads and iron condors are a 70% probability of success. But you can improve those probability not just by using deltas and probability of success, but by having the right support and resistance. This is why this lady, not me, not Kevin, who has a combined experience of 40 years, this lady, Penny Creel, our best student in the Day Trading Zones community, after 4 months learning, refining from the Mastery Day Trading Zones, started making 232% on her account. Took 32,000 to almost 112,000. Using only what? The power of focus, credit spread, iron condor, and be able to back ratio, defend, and max profit on them. This is why she has been an incredible trader. So the point here is you don't need to be the jack of all trades, everybody, on those to be successful. Is that it? Is that helpful, everybody? Because that's the base of the pyramid for us to start really talking about iron condors, credit spread. Is really, some people, so I've traded options and sometimes they're like, oh, that clicks, you know, those three components, how they interact with each other. And it's very, very profound, you know. So let's go to charts. And let me show you something on the day trading zones that you have to understand. This is a distribution, a bell curve. It's a distribution of statistics. So if you have traded options before or credit spread on iron condor, they said if you trade within a standard deviation, you'll have 68% chance of success. If you stay within 2 standard deviation, you will have 95% chance of success. If you stay within 3 standard deviation, you'll have 99% chance of success on your trades. What does that mean? That means that at the middle here, you are the current price. You have only a 50% chance of success. But if you choose a support here and you choose a resistance here, you have 68% chance of success looking at your deltas. Same here if you go a little larger, same here if you go larger. So for instance, if we are looking at Apple and let's say Apple is 114, maybe, let's try to go back to, so is at 114, here's what might happen. Okay, what might happen is I might look at Apple at 114 here and say, okay, I'm going to trade at 68% delta and look at the delta. I might say, okay, 111 here and 118 here. At 95% chance, it's going to give you maybe a support of 109 and 120. And then at 99% chance of success, it might give you a trade at 105 and a trade at 122. And then DayTradingZones does the same idea, so it will be like a reverse distribution of statistics with price action, right, and order flow. So we don't use the delta, we use the previous price actions, the indicator across the monthly, the weekly, the daily, the 4-hour chart, the 60-minute chart, and the 5-minute chart. And we combine everything, all our 27 zone indicators from our full Pro Tool into a very simple retail public buy zone. At the extreme of the buy zone, we look for sales, and an extreme sell zone in which we are looking for buy, and a caution zone which is tight where we are looking to not trade at all or trade at the fringe here at the extremes for higher success. And we have that blue line which is a power line that tells us, hey, do we have a higher statistics to go from here to here or a higher statistics to go from here to here? And so you have to understand that the distribution curve of the black skull model is not always right. Why is not always right? But it's wrong. Number one, it's wrong a lot of time around earnings when you look at stocks like Netflix, but it's wrong also where it's here, because when you add resistance here and you look at what's the probability of success to stay above 195 on the calls, it might give you a 90% chance of success. Whereas DayTradingZones tells you it's already the top of the elastic, like an elastic band, that is about to release and come back to the mean for good trades. This is how we have been able to do those trades that I showed you earlier, to time perfectly here the lows, the highs, sorry, in August 2015, where I woke up on Monday with $23,000 of profit on a $30,000 account, right? And then the second biggest inflection of the past 12 months was October the 16th, and you can see the trade here, October the 22nd, right? Let's see, October 22nd at the top bottom right, where we made great triple trade as well. So we get those inflection points by combining what I just showed you, which is the black skull model with the price action and order flow from DayTradingZones, buy zones, sell zones, caution zones. And it's all stemming from our full Pro Tool here. If I look at one chart, I don't want to overwhelm you, and I put a weekly chart of the full Pro Tool here on the crude, you will see that we had a beautiful crude signal, see, around this 103 area, where we went from a downshift, immediate downtrend, down arrow, followed by the pink dot, which is a 70% continuation of the downtrend from reference 1 to reference 2 to reference 3. Those dashes are the most important to the last one, reference 4, right? So when you know from point A to point B, if you have a higher probability of going down or up, it's very helpful, okay? And so we take those 27 zones that helps us, that are the same on each time frame, and we recombine them for the retail public. This is available for institutions and for the mastery students and traders. And we take that for the retail public at our basic levels and bring them on Thinkorswim, Ninja, and also what's the other platform? TradeStation and eSignal. And we come up with a buy zone, sell zones, and caution zones that gives you a map all week. So if you look here, look at the map. From the buy zone here, we cross, recross, retest lower high, go below the power line. So long we are the power line, we don't touch it. While in between the power line, that's the caution zone, you trade on the extreme, you trade on the extreme, you back below the power line. So that helps us, that has been very helpful for us to do trades and help our community get the community, because when you do trades of credit spread and iron condor, it's all about where you are to where you want to be, right? Okay, so if you look at a trade and you look at trades that we make, it's all about where you are, so let's say you are, to where it's going. You know, Grant Wetsky, one of the biggest OK player of all time, say, where it is to where it's going. That's the edge. When you have that edge here of the down arrow and ping that, you know you are going from here to here, and then you're going from here to here, and from here to here. That is the edge of those trades. It's to know with a high probability of success, guys. Okay, if you are going to go from point A to point B, right? Because this is how you can be a position trader and also a retail traders on your credit spread and your iron condor. So what we like to do with Kevin, essentially, you can look at, so let me put again, Thinkorswim has changed their platform, so I'm getting used to the new format. This is our trade navigator for the retail public with our 10 hot instruments, which is ES, right? Here, ES, SPY, Apple, Amazon, Netflix, Crude, Google, SPX, YMNQ, and we have TLT, so we cover the most important ones that are money makers. And what happened is if I open this trade here, this sell of the SPX, what we do is like to construct, when he bangs in the buy zone, we open the call credit spread. When he goes to the sell zone, we like to go out of the money, opening the put credit spread, so long the trend gives us an opportunity to enter the put credit spread. Or we want some type of a signal of a shift of momentum, and we use the power line, and we use also a 3-trade setup, the cross, recross, the cross, recross, retest lower high of the buy zone, or the ping pong trade where it goes up, down, 3 times, and on the 3rd time, we short the 3rd time, recross day trading zones, and we average 50% of our size at the top of the range of that ping pong range and 50% on the break of day trading zones lines. And so those are our 3-trade setup: cross, recross, top and bottom, cross, recross, retest lower high or higher low for long, and the ping pong trade. And we also use chart formations that works very well for us. So we keep everything clean and simple because simplicity is elegance and is power. So all the stuff that we do really is helping you construct your credit spread and debit spread, but maximize your profit, because a lot of people enter iron condors in one shot. And if you look at 10 iron condors that I enter, let's say for the month, probably 2 out of 10 only, so only 20% of my iron condor are being entered all in one. And most of the time, if I enter them all in one, is if we are in the caution zone. Like if we're in the mid-range, the midpoint of the zone, so we're at equal distance, 50% here and 50% here, this is the time where I would enter them all in one. Does that make sense, everyone? Don't worry, like Sergey, Bruce, Chris, Ralph, we'll take Q&A at the end if Kevin allows us, but there's a lot of stuff that we want to talk about. So when we are
I've been answering as we go as well. Yeah, I've been answering questions. And I will...
Thanks, Kevin. So for us, all-in-one trades will be in the mid-range, but otherwise we like to maximize our premium here and maximize our premium here, and like an elastic band, hoping, you know, although hope is not a good word in trading, hoping that we stay somewhere, if we go up or down or sideways or down, to make money 3 ways, right? So long we stay below the short strike of my call here, and so long I stay above the short strike of my put here, you make money here on your calls, you make money on your puts. But there's a right way and a wrong way to ease into your credit, your iron condor. And it's very important, okay? Because now you make money on both sides. And the beauty is your broker, I don't know if most people know, but your broker does not ask you more margin requirement. So essentially, if you open a 5 wide here, your short 10 call, long 10 call on your call credit spread, right? And it's a 100 and a 105, let's say. So you're short the 100, long the 105 call credit spread, okay? And you have 10 contracts, your margin requirement is going to be about $5,000. Well, the beauty is if you do the one on the bottom, so it goes down, and you open another one where you sell the 90, right? Or you sell the 80, let's say, and you buy the 75 on the bottom, the margin requirement is 5K, but the broker does not count the 5K twice. They are going to count the 5K only once because now you have a delta neutral position. You are short here, so you have an energy going down and you have an energy going up. So the broker is pretty much protected that you are going to make money on one side of those credit spreads. Does that make sense, everybody? So the brokers are not penalizing you. You don't have penalties, or they don't double count your margin requirements for 5K and 5K because you're on both sides. Because you're on both sides, that's an iron Condor. Then because you're on both sides, then you have a chance of making income either on both sides or one side. So the broker only penalizes you on one side. And that's very, very important, right, Kevin?
Yeah, that's the thing, you know, broker fees, right? Commission costs are very real costs in trading. And so I don't know if you, do you have our sample account that we did for the first quarter of the year? I mean, you can really rack up some fees. So we're always conscious about that. Yeah, we're always conscious about that when we're trading and when we're teaching trading as well.
So this is very, very important. So when we do trades like this, we love easing into them 80% of the time and do them all at once where we are really stuck in the middle of the caution zone. So I'm going to go through some charts, which I have not updated my chart on Friday. I was not around Friday. And by the way, you can see that just not being around, I was doing income trade and I unbalanced a debit spread from the road, still made 2,100. So if you look at let's look at real example, right, Kevin, shall we? You know, it'll be cool to look at real example.
Yeah, that's the best way we teach is real example stuff. So, yeah.
So let's go on Amazon. So on Amazon, I was telling you earlier on, I've done something pretty cool. I was short the 530 and I was long the 527 put credit spread. Well, look at the top, the logic. The trade came and reached the resistance day trading zones. So look what I've done. I took my profit on the short side, the short put, right? So short 530, long 527.5. That was the credit spread. It comes at resistance DTZ. Look what I do. I took the profit of the short put. This made money. Because we gap up at 1950 ES. Then we start selling off. What do I have left? The long put 527, and look what happened. 527 started flying on its own. And then I have income trades with positive theta, 1.4, and delta neutral, almost at perfect neutrality. That's your iron Condor. I'm short the 550 strike, and I am short the 485 strike. So I am on the call side here, and I am on the put side here. So that's an example of where we enter an iron Condor all in one. So let's go into trading zones and review the Amazon one. So go back. Let's open Amazon. Max the sell. Look at the sell. So look where we went. We went at 550, which is the buy zone, and we were at 485, right? And the 485 we took from our full Pro Tool, guys. So look, I'm here and here. So if the trade goes up, I make money so long it stays below 550 on this iron Condor. If the trade goes sideways, I make money. And if the trade goes down, so long as it stays above 485, I make money. So there are only two things I need to do when I do a credit spread or a debit spread. And this is where a lot of people get clobbered, they don't understand. Is your most important thing is to know how to defend, do back ratios and adjust your legs. But the most important thing is to decide the ranges that you are going to play with a high probability of success. This is where we use our full Pro Tool. So I go in our full Pro Tool and I look at Amazon, AMZN, and I look at the weekly. I'm looking at AMZN, right? And I see that overall the tools have been beautiful. Look, up arrow in January, blue dot, 70% of a continuation of a trend. The red dashes are the most important, so reference point 1, reference point 2, reference point 3. The trade went from 280 to 540, beautiful. But now I'm looking like where could be good support and resistance on Amazon, even though the trend is still up, even if we touch 510. So here's what I do to myself. I say, okay, 550 area, day trading zones, and the 500 area. Do we all agree? Red dash, yeah? 550 just above the red DTZ, and 500 just below the DTZ. Does that make sense? So I'm picking up like a buffer, right? So I put a line here, 550, and I put a line right here. Now, question to everybody. Do I care if the stock goes up, the stock goes down, or the stock goes sideways, so long it doesn't breach 550 and 485? I don't care? Yes or no? The beauty of income trade, especially if you have a job or you don't have the time to watch. Is that a beautiful way? Yes or no? Quick yes, no, please. Is that a beautiful way? This is the only place in trading where you say, okay, I make a bet if we are below 550 and above 485. And you make money three ways. Well, if you don't care, John, well, you don't care about making money. We care. The only thing that we care about is making money. I don't care about being right or being wrong. All I care is making money and not losing money. I don't want to look at myself in the mirror every morning, right? and look at myself and look at my family and say, I don't care, and I treat that as it's not a business. This is a business, guys. You need to take it as a business because 90% of the people lose money. It's very serious, and we are very passionate, in case you have not realized, for the past hour, and really helping you understanding this business the right way. So this is a very powerful process to be able to let pretty much the market does what it wants to do for 65 points, guys. I have a range of 65 points. Whether the market goes up, down, or sideways, right, Kevin? We make money. So long the short strike, the assumption of the support and resistance are right, you make money. And that's the key in those income trades, guys.
And look there, see that 515, 510 level? Isn't that 515 level about the middle of the range that he's given you? Right? So if you're putting that iron condor on, I mean, we like to leg into iron condors, right? But if you're putting it on all at once, right at the mean, right in the middle of the range, what a great place to put that on, because you've got your low side, your 485 side is going to make money as price rises, and the 550 side is going to make money as price falls. And so it's kind of a push-pull between the two. But as long as price stays between this range, you're making money. You're the premium seller, so you're making money.
So this is why your support and resistance are everything, guys. You need three ingredients, whether you are engaged in our community and what we do or not is not as relevant as having those three steps. The first step you need to know is what is the main trend. The main trend is going to be your monthlies and your weeklies. Okay, what's the main trend? Where is the support and resistance on my main trend, on my monthlies and weeklies, whatever you look at? That's your first step. The second step is to know what is the immediate trend. Are we going up or are we going down? The immediate trend is going to be your 60-minute chart and your daily chart. Because sometimes you might have like this, a main trend up, See, blue dot, blue segments, but the immediate trend, the 60 and the daily right now are tanking towards 516 or 500 on Google, right? And that's what you need to know, the difference between your main trend and intermediate. And this is a lot of the timing, like by the way, Kevin is going to do an event live this Tuesday on how to time your trades for consistency and confidence. It's going to be this Tuesday, I believe, right, Kevin, at 8 p.m. So
Tuesday evening.
I even will come and be there, even though I've learned, I've been trading for over 21 years. I will be there and listening to Kevin. You know, I learn from my co-trader. He learns from me. We, as a community, all learn from each other, and it's very powerful. And this is free. This Tuesday. We'll show you how to get to that event in about 10 minutes and register for free. But this is key. This is key, you know, to understand how to time properly your trades for consistency and confidence, because that's tied up with your success in your credit spread and iron condors. Does that make sense? This is very, very, very important. And then the third step, right, after you've decided you've seen the trend and the support and resistance, is to place your option strategy that makes money, not being the jack of all trade, but doing the few option strategies that make consistent money and structure what? It implied volatility, you know, you need to really synergize those three components, because it's like I've shown at the beginning of this presentation, it's very difficult in options to have all those components right. So here, we did this iron condor, and again, it's difficult because they've changed everything, right, Kevin? Look, it's out. I cannot even. It's
even if they change that color, it's like, oh, what's the deal here? But no,
yeah, exactly.
It's pretty plain.
I'm like, what the heck is going on here? Because they just changed this morning. They just did their update. And look, another example, but that's not an iron condor, but as you are engaged to the community, I was long 50 contracts of the 195 puts Friday and short 50, and then I started unbalancing my legs where I am net long 14 contracts. And you see, this is for maximum profit, $900.
That's a little bit more advanced. That's the back ratio. But you know, that's one of the things that Penny is an expert at, is unbalancing and back ratio.
Right. Or Google. You want to look at Google. Look, Google. Here's an income trade. See, we mix it up. This is a call credit spread at 700 and 705 I have on Google. I sold this for $1.21. There's 20 days to go, and it's at 60 cents. Another one here is the iron condor. Here goes again the iron condor. 685. No, sorry, 680 short strike on the call, and on the put 590. So do you guys want to look at the Google one? 680, 585. Let's look at Google. You look at Google, you go to the retail public tools that have no extra cost. They fit right in Thinkorswim or whatever. And let's go see that Google. So let's Google. Go to Google. I'm trying, Kevin, to get used to this thing. So it's an hour. Okay, so here's Google. Look, perfect chart on Google that shows you we went from the buy zone, right, around that 685, which is my short strike. We retested the top of the caution zone, the bottom of the caution zone, and rejected completely. And my short strike on the put was what, Kevin? I forgot. 685 and what, guys? What did we say? 685. This is the call credit spread short strike. And do you remember, Kev?
Yeah, I thought it was 625 down at the lows.
No, I think it's lower. Let's see. Let's go back to the trade.
Yeah,
585.
585.
So if you compress, well, right there. So here's the deal. I make a bet that we stay above that, and I make a bet that we stay below 685 right there. So whether the market goes up, whether the market goes sideways, or whether the market goes down, boom, we make the money. See, it's very, very, very profound, right? So hopefully this helps you guys. We are going to go more in details on how to time those trades with Kevin. Kevin will do the event, so it's not going to be me. I'll be attending next Tuesday at 8 p.m. Kevin will go over again how to time properly your trade for consistency and confidence. He'll be introducing 5 elements that works on all your trades. But really, our point also is that you want this business to not be that, okay? You don't want your business in trading to be this, a casino where you have random profit, because everybody in this room at one time or another got some profits. The problem with profits in trading is the worst thing that can happen to a new traders is that if you profit 2 times out of 10, right? It gives you the false feeling that you know what you are doing. And the truth is that you are a consistent trader when you profit 6 times out of 10 to 9 times out of 10. And most importantly, the times that you win versus the times that you lose have to be bigger. It's a business. It's a cash flow. It's a net cash flow. Do you win more on your wins than on your losses, right? So you want to really have this business to be a sustainable income business. And this is what we strive in the day trading zones, is to help a community trade with most of their money income trades, like Penny, who has triple her account, and do it in a systematic and consistent way. Because I don't know if you have been new with us, but I am obsessed with processes like a franchise, because I recognized very early on that the successful businesses, and we have a business like McDonald's, like all those big companies, have processes that works and are replicable. And I think McDonald's is the best example I can give today, is that if you are someone who has little education or knowledge of business, and you go through 6 months of training at the McDonald's headquarters to run a McDonald's franchise, do you think you'll be able to manage a multi-million-dollar business successfully? Yes or no? Yes or no? McDonald's proves it every day. Whether you have education, no education, whether you are very smart or you are mildly smart or not smart at all. Is McDonald's proving that they have such steps, precise steps? Step 1, do this. Step 2, do that. Step 3, do that. Cook the burger at X degree. And the processes to run a McDonald's franchise are available to everybody. And this is how we have approached our business for the past 21 years that I trade plus, right? And 13 years that I have been helping traders, right? Newbies and institutions, is to be systematic. You know exactly what you have to do. You have the tools to do it. You have the knowledge and the training, and you have the live experiences. So hopefully you'll be joining us in the live event next week. It's a free event. Most importantly, if you go, I'm going to give you a link from Day Trading Zones. It's called realtraderswebinar.com. Let me see if I can post it.
Mark, I've put it there inside of the chat box, guys. It's realtraderswebinar.com/DTZ Tuesday.
Okay, so again, I'm going to post it there too, visually so people can see it. This is the link for you to attend for free Tuesday. But most importantly, if you cannot make the event Tuesday, okay, if you cannot make this event Tuesday, this link will also give you access to a free part series with real money that we've done. It's free. It's absolutely free, right? That we are going to give you. It shows you some of the income trades and how we do them, and some of the growth trades that we do. So as you sign for this realtraderswebinar.com/DTZ Tuesday, not only will you be automatically registered for Tuesday, Kevin? I'm not sure.
Yeah, what'll happen, guys, is you guys will get a free video training series from Day Trading Zones, and you're also going to be registered for Tuesday's event automatically. So you'll get both the free training series and registered for Tuesday's event.
Awesome. So you guys will have not only the training series at this. And again, also, if any of you guys are interested in what we do and go deeper into what we do, you can always visit our DayTradingZones.com store right there, DayTradingZones.com, and you go at training. And what we have on the training tab here, hold on, this is where you get also access to the video, but here, services, sorry. And you go here and we have classes for beginner and advanced people. And here, if you type to the beginner, we had a 3-hour, what was that, Kevin Stewart? 3-hour class, I believe, on Iron Condor for profit and mastery. So
yeah, it's recorded a 3-hour class. It goes much more in depth, but you know, the neat thing is that it takes
tells
repetition.
you everything that you get. Yeah, it tells you everything that you get, and we give you also 3 months of the buy zone, sell zones, and caution zones, which is by itself worth $300. So basically, you get the class for free or the zone for free for $297. If you are interested, it's in our class. There's no pressure there. If you are interested to go deeper, just explore the store at DayTradingZones.com services page. But most importantly, we are looking forward to seeing you this Tuesday at this event. Get to know each other. You guys get to be engaged in what we do, and give yourself really an opportunity to understand those income trades and those growth trades better at realtraderswebinar.com/DTZ Tuesday. And if you guys have any questions, we'll be glad to answer some of the questions. If Kevin at Real Traders give us 5-10 minutes, that would be awesome.
Yeah, no problem. Go ahead, guys. So you.
Okay, thanks. So if you guys have any questions that we missed, I'll be love to answer it. I know that Kevin Stewart, my co-head, has answered privately on the chat a lot of your questions, guys. But if you guys have the questions right now on some of the income trades and stuff that we talked about, feel free. Otherwise, we will see you Tuesday at 8 p.m. We are looking forward to showing you some of the ways you time those trades,
Yeah. Mark, I just wanted to answer Rodney's question. The thing about the Tuesday webinar is, this is a particular market, right? This is not a very typical market, and with such high volatility, I think it's, what we want to do is we want to look at the live market, what's happening right now. Okay, and the stuff that we have is not presentations that was canned from two years ago or whatever, because this is a different environment. So what we like to do is we like to keep up to speed. What are the trades that we're taking currently? What are the setups, and what do we need to watch out for here in this type of an environment? What can we look forward to? And so yeah, we want to stay definitely cutting edge and relevant to the current market environment. We're not looking backwards. We're looking what's happening today and what's going to be happening in the future. Yeah, thanks. Good question.
Let me help Ralph. Ralph says, what do you think here for the ES? Well, look, if you look at my overall picture of the market, you see that overall we have down arrow, Ralph, ping that. So the main trend is down in this market right now, but it doesn't preclude that we had violent retracement like we did on the red dashes Friday, 1950. I talked about the 1988 and the 2025, 2050. Even if by the end of the year we have big rallies to those points, those rallies will be rejected. So here's what you want to look coming into Mondays, everybody. If we stay below the 1927, write that down, guys. 1927, 1932. The shorts are in control, and they are in control to retest this 1890 area. We have an 1890 target, and then, of course, a completion of this low here. See, a completion of this low around the 1814. So we are looking first at this area. It's called a cluster. See, there was a high, low. We are looking first at this cluster to hold, which it would be slightly below the first touch of last week. So it could be a head and shoulder from last week around the 1900, or it could be a double bottom from last week at 1890 area. So watch that 1890, and then if we stay below the 1890, it's a complete retest towards 1814. So 1814, 1890, 1932, right, guys? 1950, write that down because it's going to work till December. 1988, 2050. Is everybody clear? Hopefully that's helpful, Ralph, and hopefully it did answer your question. Okay? You know, in trading, you cannot say up, down, and blah, blah, blah. What you have to say, and the way we structure all our trade is like this: buy zone, sell zone, caution zone. Meaning, above a certain point, buy, below a certain point, sell, in between a certain point, caution. That's the way I've been trained, you know, in the hedge funds and in the prop firms, is to have a multi-dimension mind where you are prepared to buy, sell, and be cautious, knowing your reference and your zones. Because this business where retail traders lose their pants is when they focus on, oh, this is going down, oh, this is going up. No, you have to be focused that above a certain point, the longs and the algorithm and the high frequency trading systems are going to kick. Below a certain point, the shorts are going to be in control, and in between 2 points, this market is going to go nowhere, and it's going to be choppy, and it's going to be dangerous. Once you recognize those reference points, this is the point where you are going to be a consistent trader and not a gambler anymore, because you have a three-dimensional mind and not a one-track mind, and this is where traders get in trouble. Let's answer a couple of more questions, and let's go. Let's go. I think that's it. That's it, Dale. I do work full-time, but still want to get the return of day trading. Guys, can this be auto-traded through Thinkorswim? Help him. No, it cannot be automated, but you have to understand that Penny Creel, the person that I show you that, by the way, I want to show that she's real and it's no bullshit. Yeah. Let's go to my mastermind protege trader. So let me see.
While you're looking for that, Mark, I just wanted to say to Dale,
yeah,
you know,
please.
you can put in good till canceled orders, right? I mean, we do that all the time. You know, we're busy family people, right? So what we'll do is we'll have a position on. We know where we want to take profits, and so we'll put GTC orders in to exit for profits of our trades, right?
So
and we
let
also
me
have alerts too. Yeah.
Okay, so this is our mastermind group. Those are the traders who join us for the mastery program. Over the years, you know, we have 316 members just for that master. This is a program where we take people under our wing for about a year, and we do it about twice a year. That's about the frequency on which we do it. Yeah, sometimes 3, sometimes 2, but we only open our doors very, very seldom during the year. And the next time will be October 19th. By the way, if you want to mark your calendar. Well, so those are the faces of some of the members. See, they are smiling at least. But if I look for Penny, see if I go to search and I look for Penny, and that Penny Creel that I showed you, there's 230%. She's a real person. See, she posts all the time, and she helps the community all the time. She's a very generous person in our community when she's part. So when you are part of the community, you have access out of the, it's not just having the pair of eyes on the processes that we do of me and Kevin, but you have the help from other 316 people. And you are not just a number, you are a real person. You know, you have a face, you post some posts, you know, and you get engaged on the community, on the real stuff that we do, you know, because we do them all the time for real, you know. So hopefully this was helpful. We are looking forward to seeing you this Tuesday. Again, the link is www.realtraderswebinar.com/DTZ Tuesday. And we are looking forward to seeing you at the event from Kevin Stewart, a 3-generation trader, my co-head trader, a former hedge fund trader also like me. This Tuesday on how to time your entries for consistency and profit for your income trades and growth trades. You take care, everybody. Hopefully that was helpful, and we'll see you next Tuesday.
Yeah, thanks for being here. And we got all caught up with questions as well, so everybody got their questions answered. So I know that was a concern. So awesome. Thanks for being here, guys.
You take care. Thanks for the feedback, Bruce, Sergey, you know, Lee. Could you use conditional orders as well as good till cancel? Yeah, but you know what? if you guys have a job, really, if you have a job, just go at the top of the zones, and you can, with your iPhone, look at your position once a day during lunchtime and once a day after work for 5 minutes, so long you only do the credit spreads and iron condors. You will not be able to do directional trades if you have a job because that'll be gambling. You will not have the time to have your nose on the trades. If you start breaking debit spreads, legs, or buy straight put, straight calls, you'll get killed. You will get killed if you have a job and don't have the time to watch that. But hopefully that was helpful, and then pulls some ways of thinking differently or aha moment. If we are able to do that, at least we achieve our mission for the past hour. And believe me, if you stay engaged to what we do, we have action videos and analysis about twice a week for free. We also, once a month, have live events. Get engaged, stay in the community, and learn from people who trade real money and does it every day with real money. Not monkey money or Mickey Mouse gurus. We trade. We are real traders, and I have been a trader since I started my life in the US when I was 21 years old. You take care, guys. You have a great weekend. Stay safe.
Action videos. You'll just continue to get free training and awesome value from both Kevin and Mark. Guys, thank you so much for being here. Mark and Kevin, we appreciate you taking time out of your busy schedules to be here to train us. And guys, again, thank you for being here and spending your Saturday morning with us. We look forward to seeing you on our next event. Have a great weekend, guys.